Happy Friday and welcome to another video. Before we get started, let me just tell you, hopefully I'm already praying that the barbershops are going to reopen pretty soon, because if not, we all probably look like Chewbacca in a couple of weeks to come. Okay, before we are getting into that repatriation I want to speak about today, just will give you a little bit of an update. Last week we spoke about vaccination rates, and this is just a number for you guys out there. It's 119,483,681 vaccinations already done in 82 locations. And as I said last week, the UK are still doing pretty well. 16.5 out of 100 residents already vaccinated. But if you compare that in the US, 10.6 of 100 residents already vaccinated, with 34.9 million vaccinations already done. That's a pretty good job. And if you just compare that with the numbers Biden spoke out a couple of weeks ago, that he wants to reach 100 million vaccinations in his first 100 days, I think he's going to be a goal-getter. I think he's going to have an overshoot with that kind of pretty good data. You compare that with the European Union, please, and you have 15.4 million vaccinations done in the European Union so far, and only 3.5 residents out of 100 already vaccinated. So you see the European Union still doing a pretty bad job. It's not to throw mud on us here, it's not to throw mud on the European Commission, but it's simply the fact. The Commission spoke about the European Union as a tanker, so a tanker ship. A tanker ship is quite heavy, it is big, it is not easy to move it around or to just bring something like a little bit of more than just a move. But if you compare the European Union with a tanker ship, what the heck is the US? So think about it. Regarding the fact about repatriation, first of all, we have to speak about GDP projections and about the possible effects of GDP projections onto or into the forex, into the foreign exchange market. It's nothing like rocket science, typical old school stuff. You just have a printout when you check the website of the International Monetary Fund, for example, and you will have a couple of informations about the economic projections for the United States, for example, and for the Eurozone, just especially those two regions, just because we speak about the euro versus the dollar or the other way around. So the IMF gave you a January 2021 projection update, and it said the United States are going to be growing with a rate of 5.1% in 2021. And they said the euro area, they are going to grow with 4.2%. This is already revised down. Possible revised data is going to be up in the next weeks and months to come, I guess. And I think the European Union is going to be revised down, and the Eurozone is going to be revised down as well, especially interesting for the euro, of course. Regarding the fact that the GDP projections for the US are quite well, I just want to give you a couple of other informations about that. Not only the IMF data is giving you something more than just a heads up on that one. It's the investment bank Goldman Sachs. It's JP Morgan. It's Morgan Stanley. It's for example Citi as well. They all have projections. Citi 5.0. JP Morgan 5.5, Morgan Stanley 5.9, Goldman Sachs 6.6% GDP growth for the United States in 2021. So this gives you more than just a hint that the US is growing at a very fast pace, and the recovery in the United States is really on fire. This is not only because of trillions of dollars in kind of talking about stimulus and fiscal policy and stuff like that. If you go back in history and think about, for example, the financial crisis, The US always is faster in talking about recoveries. They are simply faster. And if you think about betting against the US, I think this is not a good idea in this kind of situation right now. And in the year 2021, it's the same thing, I guess. Betting against the US right now is something like having a shoot into your own foot. I just give you quite an example why it is pretty wrong to do that. You might have a so-called movement in the forex market, and this is called repatriation. Repatriation coming from the word patris, so it's coming home. So that kind of money being spread out there to Asia, to the emerging markets, is possibly coming home. It's going to be repatriated because a couple of funds, investors, and whatever participants think that the US are growing very strong, at a strong pace, and that the money is better to be invested. It's better to be invested in the US than, for example, in emerging markets. If you think about this so-called wave and flows coming back into the US dollar, this is very, very easy to express it. It is typical. The more flows come in, the more the US dollar gets lifted. So the US dollar is about to strengthen. What has it to do with the euro-US dollar rate? Well, if you check out the DXY, so the US dollar index, and the US dollar index, for example, is moving up in direction 95, or let's say general moving up in direction to 93, 94, 95, 96, and so on. That means on the opposite side that the euro-US dollar rate is about to have a dive, to dive down. So the US dollar is possibly taking another road, another wave into direction 116. I explain you why. It's just a theory. It's just one take. It's just one way to express what the market could do. It's nothing like a guarantee. On top of that, it's nothing like an advice. And it's nothing like someone is sitting here like Merlin the magician, watching his glass bowl and telling you the truth and telling you the future. It's just one theory, and it's a combination of that kind of fundamentals with GDP projections, dot plot, FOMC projections, Fed talk, whatever. A combination with technicals. Just look into your weekly chart, for example, looking at the inverse head and shoulder already made, possibly made. Of course, you can send me out some information if that is not the case and if I'm wrong. And a combination with the overcrowded trade, shorting the US dollar, which is now taking away step by step. How can you check that crowded trade or the old crowded trade the last month back or the last weeks and month back? You simply have a look at the CFTC data every Friday, 21:30 CET. The CET report is going to be published. Same thing today. And you can see how many people or how many big investors, so the smart money, is positioned in direction long or in direction short the buck, the greenback. And this is something like the more the crowd is traded, for example, the more short they are, and the way more shorts are out there, it's something like a contraindicator. Sentiment data is mostly giving you an information about to be interpretation of a contraindicator. All these kind of combinations give you a little bit of a hint where we are heading to or possibly heading to. And one thing on top of that, from the technical aspect, have a look at your weekly chart. Check out the 2018 high at 125.55 or 56. Look at the low from March 2020, it's 106.36. And look at the last high at 123.49, and you will see something like an inverse head and shoulders. If I am wrong, and if I do that pretty bad, please leave me a message and say, no, that's not the case. I would say it's the other way around, and blah, 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 and so on. So that's the way to communicate. Please just leave me a message, give me some information. What's your take on that? Do you have something like another idea? Is it the way that the dollar is about to lose more ground next month to come, and that the euro is going to be heading back into the territories of 125 and furthermore? Please leave me a message, give me some informations if you have just another idea. Okay, that's the way and that's the kind of a message I want to spread out today. I want to thank you very much, and for example, just leave me a thumbs up at the YouTube channel. If you like to, leave me a comment on the YouTube channel as well, or via LinkedIn. And yeah, I wish you a happy weekend, and hopefully we guys see us next week at the same place, Friday again. Thank you very much. Bye-bye.